So experts have come out and said a string of rate cuts not enough to resuscitate housing market. While it is good news that the Bank of Canada is continuing to lower its overnight rate, the effect on the housing market will not likely be seen for some time. Unfortunately, if you have a fixed rate on your home, you're not going to see a change in your payments until you actually renew. Even a drop in a full percentage point from current mortgage rates would not result in a significant increase in buying power given persistently high home prices here in Calgary and across Canada. Mortgage rates have not come down nearly fast enough to stimulate much activity in the housing market. It's just not affordable for people. It will take a significant decrease in mortgage rates before we see a return of housing market activity. That's what the experts are saying, but I think they are missing some key things. So in this video, I'm going to share with you some further analysis of what experts are saying, how this impacts you, and what to expect as we walk into 2025 with what interest rates could do. The Bank of Canada continues its delicate balancing act, gradually easing the economic drag of high interest rates as the economy is cooling. With inflation now at its lowest point in 3 years, policymakers are shifting their focus to jobs and housing, noted Phil Soper, the chief executive of Royal LePage. Now, on one hand, home values have largely plateaued this year, and affordability has improved due to lower borrowing costs, he said. However, once the backlog of sidelined buyers is released into the market, pent-up demand will drive prices higher. And this fall, we can expect more cautious Canadians to take the plunge, while those willing to take on the risk might hold out for further rate cuts, Soper said. As I went through all of these articles, a lot of the experts seemed a little bit shocked. But should they be? I mean, the market has seen a lot happen, and in some ways, it seems like we're swimming a little bit upside down. There are several factors that continue to keep many people and many buyers on the sidelines, despite these lower interest rates that we've started to see. The first thing is mortgage rates remain relatively high, with variable rates at major banks still around 6% even after some of these cuts. The stress test for mortgage qualifications remains a barrier, as borrowers must qualify at rates 2% above the actual rate. So, for example, a variable rate of 5.5% would mean you'd have to qualify at a 7.5% for your mortgage, and that hasn't changed for a while. Home prices have not decreased significantly. In fact, in Calgary, they've remained much flatter over the last number of months than many have hoped, disappointing those wishing for future price drops so far. And truth be told, there's a lot of buyer hesitancy in our market. Economic uncertainty, with 2/3 of Canadians believing that the economy is on the wrong track. There are also a lot of job security concerns, where 1/3 of people aged 18 to 34 fear they'll be laid off or lose their job. And those aged between 35 to 54 who are worried about being laid off rose 5 percentage points to 15% in a recent survey. Many anticipate further rate cuts, potentially causing some buyers to postpone their purchases for hopes of lower costs. So, where is the silver lining? Well, how is this going to help those who have mortgages or who are planning or needing to make a move in the next 16 months? Well, there's a couple places, 2 places to be exact. First one is fixed rates. There is a really good chance that we could see fixed rates come down into the 3 point whatever percentage range fairly soon. Look at this chart. So in the first column that you can see on the left, this is all of the different banks and their predictions of what's going to be happening in the future. The current target rate is where they are saying we are at right now, and they're all at 4.5%. Now, what they are saying is the target rate for the end of Q4. Some of them are saying 4%, but 2 of them are saying 3.75%. So we could see a fixed rates under 4% at 3.75% potentially by the end of this year. And the middle column, target rate at the end of Q4 2025, most of them are sitting around 3, one's at 3.25, but there's a couple at 2.5%. Those are some really big drops from what we saw in 2022. And the second barrier to entry is with the monthly cost of buying a home right now and over the past number of years. In 2022, we were seeing fixed rates as high as 7%. So let me describe what this is like going from 2022 to potentially 2025. So on a $730,000 home here in Calgary with 20% down, here's how this all breaks out. With a 7% interest rate, you would be spending on that $730,000 home $4,090 a month. Now, if that dropped down to 5.5%, at 5.5% on that same property with 20% down, you'd be spending $3,583,000 a month. Now, at 3.75%, you'd be spending a jaw-dropping $2,993 a month. And I say jaw-dropping because the drop of $1,097 a month from 2022. That's $12,000 to $13,000 or more a year less that has to go to service your mortgage because the interest rates are a lot lower. And at the end of 2025, if we see a 2.5%, you'd be spending $2,616 a month, which we could see again at the end of 2025. And that's a further $377 a month. And as announced on September 16th, 30-year amortizations will be allowed for first-time homebuyers, including those that are newly separated or divorced and haven't owned a home in 4 years. This is all going to take effect on December 15th, 2024. So, for that 3.75% fixed rate we could see by the end of 2024, mixed with the 30-year amortizations coming in at December 15th, if you had a mortgage of $2,993 a month, you could easily see that payment every month go down to $2,695 a month, which is a crazy $1,395 lower per month than the same home or the same priced home in 2022. Now, for me personally, I'm starting to wonder if the affordability that we are needing and that is going to be coming isn't necessarily in the form of prices catering, but rather in monthly costs for borrowers. But that's gonna be for another video. The chief economist at BMO said the bank is expected to continue grinding down rates in coming meetings, while we anticipate a series of 25 basis points steps into early next year, but we certainly will not rule out a possible 50 basis point step at some point as well, he added. So many agents said as soon as the interest rates initially dropped that buyers would be rushing to the market, which just wasn't true. The reason is that when the Bank of Canada was dropping rates, it wasn't affecting or changing the fixed rate. But now, that could all change. The Bank of Canada has said, when we adjust our policy interest rates at the bank, we don't expect immediate results. It usually takes 18 to 24 months to see the full effects. But with the Bank of Canada dropping their rates, we have started to see bond rates shifting and adjusting downwards. And with that, we start to see fixed rates take change and adjust down too. So this, fixed rates, is the interest rate that will impact buyers in our market much more when it comes to increased activity. And here's the reasons. According to a Rate Hub article that I found, buyers usually like fixed mortgage rates more than variable rates. In 2021 and early 2022, more people chose variable rate mortgages because they had lower rates. And by the end of 2022, 25% of mortgage money in Canada was in variable rate mortgages. This was up 5% from 2019. The Bank of Canada raised rates a lot between March 2022 and January 2023, and this made variable mortgage rates go up a ton, right? So fewer people wanted to have them. In 2023, only about 5% of people inquiring about mortgages on ratehub.ca wanted variable rates. This was down from 26% in prior years. In 2024, a survey from CMHC found that 23% of people chose variable rate mortgages, which was down from about 27%, and while 69% of people chose fixed rate mortgages. All that to say, buyers want security versus a mortgage payment that could change. And I can't blame them. The reason being is we had such swinging interest rates. We had prices that were going nuts, and people wanted to have, homeowners, buyers wanted to have security. And so As we walk into this next number of months, this next 18 months, let's say, we are going to start seeing fixed rates impacting our market much more than what the Bank of Canada is doing with the variable rates. But if you don't know how to time the market, all this info is not going to help you. So you need to watch this video here where I break down selling in the fall versus spring of 2025 for the 4 different product types here in Calgary.